Okay, so we are currently streaming live on YouTube. Hi, good afternoon, everyone. Thank you for joining us here today. The session would start at the dot of 1 p.m. So again, thank you for joining us. We'll start once it's time. Hi, good afternoon, everyone. Thank you again for joining us on today's session of the TEF Alumni Masterclass. Today we have a sister company, Hayes Insurance Group, who will be taking us on tax and insurance, all you need to know as a business owner. We hope that the session is impactful and you leave the session with knowledge and hopefully you pick one or two things and you invite them or introduce them to your business. All right, I'll hand over to my sister colleague, Chineye Ume, to take over the session. Thank you.
Thank you very much, Aisha. Okay. Thank you very much, Aisha. Okay, Aisha, please confirm you can hear me and I'm audible.
Yes, you're loud and clear.
Okay, thank you. Good afternoon, everyone, once again. My name is Chineye Ume, Product Marketing Manager, Hayes Insurance Group, and you're welcome to this session. So I'll just introduce our colleagues who will be taking us through the session. I'll be the moderator, I'll be moderating this session. But for the speakers, we have Temitope Adonis. Temitope Adonis is the regional head, West Region for Hayes Insurance Group. And we also have our second speaker, Mamaka Itie, who is the Group Tax Manager, Hayes Holdings. So both Temitope and Mamaka will be bringing insights from tax and insurance perspectives on how you can leverage these two entities to move your business forward, the tax rules to know for your different location where you are, so that you can make more money, of course, and hold on to the money that you make in your business and don't allow it to go down the drain. So without further ado, I would like to hand over to Mamaka to take us through tax policies that we should imbibe in our different businesses. Mamaka, over to you. Thank you.
Thank you very much, Chineye. Hello and good afternoon, everybody. Please, Chineye, can you hear me clearly? Hope there's no echo.
Yes.
All right. So welcome, everyone. As mentioned, my name is Wamaka from Hayes Holding. And today we'll be looking at the relationship between tax and insurance, all you need to know as a business owner. At the end of this session, you might not know every single thing, but we have the confidence that you'll be able to move forward from any knowledge that you currently have on ground. So before we start, there's just a quick reminder we want everyone to know. So in the words of our founder, If you do not care about how your business is conducted, your very future may be at stake. So at this point now, what we need to know is that how your business is conducted should be important to you. In business in Nigeria, we have taxes, we have insurance. So all of these are important. But if you do not care and if you do not pay attention to how your business is conducted, your cash flow and a lot of your items will be at risk. So now let's look at the business of taxation as it relates to insurance. So, but first of all, before we dive in, we have to remember what is tax. And then we know tax is a compulsory payment, is levied by the government on individuals and businesses. So in essence, you can look at it as tax is government's money. And then why is taxation important? Tax is the lifeblood of every economy. Tax is what runs the business, or is what runs the government as a business. So if you think of the government as a business, it is run by taxation. So that is the blood that keeps it running. And then looking at Nigeria at a glance, even though we know that, yes, this session, we have people from different countries, from East Africa, North, South, West, who are also in Nigeria as a core, because as we know, our foundation, Tony Middle Foundation, is in Nigerian foundation, first of all, then it is African and global. So looking at Nigeria at a glance, the Nigerian taxes are managed by the Nigerian Revenue Service. This was formerly the Federal Inland Revenue Service, FRS, and this change of name officially occurred in January 2026. We have different laws that govern Nigerian taxes. We have Nigerian Tax Administration Act and a whole other host of laws. The key taxes that we've seen that businesses are exposed to are companies' income tax, the withholding tax, value-added taxes, capital gains taxes. So all of these are key things that we need to know about Nigeria at a glance. Then, globally, taxes are jurisdiction specific. So what this means is that even though tax is a universal concept, the specific rules used in taxation in one country might be different in another country. So for example, let's look at withholding tax. Within Nigeria, Nigeria has different rates for withholding taxes depending on whether the person is a resident or non-resident. Other countries also have different rates for withholding taxes. In Kenya, we have some rates at 20%. We have like 15% in Ghana on the same transaction. So you can have the same transaction, but depending on the country, there are different treatments. So if you just assume that because you know taxes in East Africa, you can automatically align in every other country, you have to take a step back and know that for any country where you operate, you need to understand how taxes work in that particular jurisdiction. Another thing we know is that taxation is imposed in a country of registration and operation. So even though we are saying that tax is jurisdiction specific, we also have some things we call tax nexus. And this comes in when you are doing cross-border transactions between one party and another party that are in different tax jurisdiction. So what we're looking at here is that in a particular situation, you can be domiciled or the company can be registered in Kenya, but they might have created some tax obligations in Nigeria. So even though they believe they're a Kenyan company, for taxation, they would have to abide by Nigerian tax rules. So when you think of all of this and doing business, you have to remember that even though tax might be seen as face value as being jurisdiction specific, you also have to know whether your relationship and your transactions in other countries have exposed you to become tax residents in that country, even though you're business residents in another country. All right. And then when we think of taxation, I know some people might say that laws are a lot and the laws are plenty. Where do they start from? And that's what we have to remember is that ignorance of the law is not an excuse. So that's why we have a lot of ways we can learn. We have the tax authorities. The tax authorities are actually very open and willing to help when you reach out to them for additional information. We also have tax consultants, and then some companies employ in-house tax managers to also protect themselves from all of these risks. Then we also have a concept in taxation called transfer pricing. Everybody here will not be exposed to transfer pricing risk. Transfer pricing occurs when a company has related parties in more than one jurisdiction. So when that occurs, whenever you have business with your related party, meaning a company that you are related to, either through shareholding, management, subsidiary, depending on how the rules of transfer pricing are defined in your country. When such a situation occurs, you have to take a step back and look at the transfer pricing rules and check how you're exposed to it. Then in Nigeria, there's some taxes that every SME should know. So by SME, we mean small and medium scale enterprises. So every SME should know that you have income tax, companies income tax, personal income taxes. There are different rates depending on the revenue size of a business in Nigeria. Most businesses are exposed to 30%, while other businesses which have revenue of 100 million naira and below are exposed to revenue, companies income tax rate at 0%. We also have personal income tax rates that extend up to as high as 25%. We have value-added taxes. So this rate is for Nigerian transactions. Value-added tax at 7.5%. Then withholding tax depends on the type of transaction, also depends on where the beneficiary is located. So the rate for a resident and non-residents are different in Nigeria. Payee is the personal income tax. So payee, when you think of payee is when it is deducted by an employer. We also have stamp duties in Nigeria. A lot of the time, people forget about stamp duty, but stamp duties can be material when the transaction or agreement is important. So stamp duty has rules in our tax laws. So some of the common mistakes that we see is that for some companies, because they believe that they are exempt, they forget to file. So in the laws we have penalties for not filing. So even though you are exempt and you're not required to pay taxes, you could be exposed to penalty for not filing. Another mistake we see is withholding tax treatment. So in Nigeria, some transactions and some persons are exempt from withholding tax, some are not. So if you make a mistake in allocating who is exempt and who is not exempt, that can expose you to unusual risk. We also have VAT errors, and I'll say in my own review, VAT errors are one of the most common transaction errors that businesses make. So for VAT errors, if you wrongly compute VAT on an item that should have been exempt, collecting your refunds can be a tedious process. But with the new tax laws in Nigeria, collecting a refund is supposed to be easier. Then another error we have is that if a company is exempt from withholding from VAT and they go ahead to impute VAT on their invoices, they are mandated to make that payment. So if you are exempt from VAT and you go ahead to impute VAT on your invoice, you must remit that VAT to the government or you face interest and penalties. You're not allowed to keep it. So VAT is not the person's money. VAT is government's money. We also have transactions with unregistered vendors. In Nigeria, if you do a transaction with a vendor who is not registered for taxes or who does not have a national identity number, you'll be exposed to a penalty of up to 5 million naira. So you might wonder, why is this important? Why this is important is that this is a penalty for just failing to get a registration or confirming that your vendor is registered. And then another thing that is important, another mistake we see is that sometimes some vendors, because they believe their business is small or they are still new in the business, they model up their personal and their business expenses. They don't keep proper accounts. In a situation where the tax authorities decide to audit them, they start having a lot of issues because they're not able to separate their books. So that's failure to separate your personal accounts, to separate your expenses, to keep improper record. It's a very serious mistake that has potential penalties because you don't have any proof to use to justify yourself. So moving forward now, what are some things that across the world, no matter which jurisdiction you're operating your business, what are some rules that everybody and every business needs to know? I will say the first one on my list, which you might have gotten by now, is know your local laws. Okay, so every country has their own tax rules. Every country has their own tax laws. Nigerian, as I've mentioned, even when countries are similar, let's use, for example, the ECOWAS countries. You might say that ECOWAS countries, Economic Community of West Africa states, that since they are all in the same, they seem to be in the same area, they all abide by the same AFCTA and other codes. But that still doesn't mean that you don't have to know the rules, because each country has their own unique laws that you must abide by. They have their own registration requirements. So you need to understand, for my business, what are the rules? What are the exemptions I can get? What are the ways I can make my business better? That even though I'm being compliant, I'm also getting some tax benefits. So know your local laws. The next item we look at is review every agreement. So just know that in every business transaction you're taking part in, the government is the third person in your transaction, or the government is your silent partner. So for every business transaction, you have to check what are the tax obligations. What is the obligation? What is my obligation to the vendor? or my party or my counterparty's obligation to the vendor. So you have to structure your transaction so that you are still compliant while reducing your tax exposure. Because number one, compliance is key. Why compliance is key is because non-compliance will lead to unbudgeted business expenses, which would be disallowed and which would affect your cash flow. Another thing that every business should know is cross-border obligations. That once you have payment to a foreign party, or once you are receiving payment from a foreign party, you have to map your transaction flow. What are all the tax incidences? Have I created a fixed base in the other country? Meaning that am I exposed to tax in the other country, even though I am still in my country? So bringing this home, if a Nigerian party is doing business with a party in South Africa, they have to review the transaction. That what type of transaction is this? Is it a good? Is it a service? By this transaction, would I only be exposed to taxation at the border, or that is at the point of importation? Or will I be exposed to additional transaction taxes or income taxes in Nigeria or in South Africa by virtue of this transaction? Are there tax treaties I can use? So what are tax treaties? Tax treaties are agreements between two countries which are beneficial, which make the business terms better for the two parties who are involved in that transaction. So that tax treaty, what it implies is that if, for example, Nigeria and South Africa have a tax treaty, which they do, you can look at the treaty and check that what are the benefits that the tax treaty gives to the Nigerian party or to the South African party just by virtue of having a tax treaty. What are the special considerations that they can get? Then another thing every business should know is maintain proper records. No matter where you are, what documentation leads to disallowed expenses? So how do you maintain proper records? You need to do bookkeeping. You might wonder that what if my transaction or my business is not complex? If your business is not complex, you can decide to use Excel, you can use Google Sheets, you can use documents on your phone to keep your business records. You can snap the invoices. But as your business starts growing and expanding, it would be very advisable to invest in a good accounting system. If you don't want to go that far, you can also check Apple Store or Google Play Store and get some off-the-counter systems that you can rely on. Then you should know that please always consult. We have the tax authorities, we have consultants. Use help proactively. And then compliance is non-negotiable. Once you're non-compliant, interest and penalties can occur. And penalties are very annoying because rather than pay a penalty, won't you rather invest that money in your business? Moving forward now, remember this session is about insurance and tax. So what is the handshake between insurance and tax? How is it related? So insurance keeps you standing. Insurance is for your risk purposes, but tax keeps you compliant. So there are different items you have to remember when you're looking at insurance and tax. We have insurance premiums. Most of the time and in most countries, insurance premiums are tax deductible. That means that when you pay premiums for insurance, you're allowed to treat that as a valid business expense. You will not be paying extra tax on insurance premiums. Then insurance claims are when you have an uneventuality that occurs, what can you do when you receive that money? The insurance claims are what you can use to get back on your feet from wherever you stopped. So, but whenever you get an insurance claim, there's some things you have to check based on most of the laws we've seen. You have to check whether the insurance claim had been subjected to tax in the past, and then whether the insurance premium you paid were really valid. We also have employees, payee and insurance relationship. So for most employees in Nigeria here, there's something they call the group life assurance. So that group life is that if something happens to your employee out of the blue, or if the employee dies, the company has already insured the person's life and would have the insurance company make a payment to them. So that is why that is important, is because any group life assurance, your health insurance, pension contributions, they are allowable tax deductions. So government allows you to treat them as valid business expenses. Then we have our asset schedules and capital allowance. So whenever you look at anything concerning your business, we always have to think that, have I insured it? Have I protected myself? And then as you're protecting yourself, you also check that these protections, are they valid business expenses? However, if you do personal insurance and treat them as business costs, but they are not part of your core businesses, in most of the tax regimes, those transactions will be disallowed because they are not your company's core operational businesses. So you always need to check that. What am I insuring myself for? Is it personal? Is it business related? How do I classify it? Am I classifying it under myself? Am I classifying it under the business? So as you're thinking of your taxation and compliance, you also have to think of how to protect yourself from eventualities. All right, I think I can pause at this session and call Chinaya to continue with the program.
Thank
you
you.
very much.
Thank you very much, Momaka. Thank you for that exhaustive presentation. So I hope we're all taking notes and learning the do's and don'ts of tax and how we can leverage tax to advantage. So I'd just like to take 2 minutes to, of course, welcome everybody once again. Thank you for joining us. And I would like you to rep your country in the okay, I'm sure you can see me now. Okay, so I was saying I would like us to take 1 or 2 minutes to just get to know each other in the comment section. So rep your country using your country flag. So where are you joining us from? Would like to acknowledge you, right? I can see Raphael. This is country flag. Raphael, thank you for joining. Patti Camara from Mali, thank you for joining. Okay, who else? I can see Derek from, okay, that went off. I can see The Truth Bizog from Nigeria. I can see Kelvin from, well, his country flag is there. I can see Jelsin Casavilla from Angola. Thank you for joining. Thank you everyone for joining. So before we head on to the next session, which is insurance, which Temitope will be taking, I would just also encourage us to note down our questions as the session is going on. If you have questions, of course, I'm sure you would have questions for our brilliant facilitators. So just note them down. You can put it in the chat box in the comments, and after the session would, dedicate about 15 minutes to discuss your questions and answer them, give answers to your question. So right now, I'll hand over to my colleague, Temitope Adonis, to take us through insurance for SMEs, all that you need to know, and how you can protect your business. Temitope, over to you. Thank you.
Okay, good afternoon, everyone. Chinaya, can you confirm you can hear me?
Absolutely.
Okay, so thank you everyone for having me. In the next couple of minutes, we'll be discussing all we need to know as business owners about how to protect our business and to secure our future. Okay, having said that, okay, so just to touch up on who we are, S Insurance Group is the insurance subsidiary of the leading Pan-African investment company with 24 with investment across 24 countries, ably chaired by Mr. Tony Elumelu. The S Insurance Group is championing financial inclusion and leading digital insurance play in Nigeria and in Africa. The Hedge Insurance Group is made up of 3 companies. We have the Hedge General Insurance that takes care of non-life businesses. We have Hedge Life Assurance that takes care of life transactions, and we have the Hedge Insurance Brokers that serves as intermediary and aggregators for insurance transactions. So for us, our purpose is very simple: to improve lives and transform Africa by making insurance accessible to everyone in Nigeria and beyond. And at the core of everything we do is execution, enterprise, and excellence. So putting it succinctly, we say that everything we find our hands to do, we do it with excellence. So having said that, so the previous speaker has touched on a few things about insurance, so he's going to make my session easy from here. So insurance for SMEs, why does it matter, right? And why should SMEs care about insurance, right? From research, it is seen that 80% of SMEs do not recover from a major loss. And most times this is because at the point of planning, we plan about how to secure investments, secure assets and everything, but we neglect that part of the risk management. And because we don't do that effectively enough, right? An unexpected event can wipe out all the years of our effort, everything we've put together, the nice business proposal, every capital, everything that we've put together. One single event can wipe out all the years of effort that we've put in to setting up that enterprise, right? I'm sure for those of us that still have the memory of the event of 2020, right? A lot of people went to work, they left their businesses, and by the time they came back to work the following day, everything has been looted, right? And as we speak, it's almost 6 years, and as we speak now, a lot of the businesses that were affected there, then are nowhere to be found. They couldn't bounce back because they do not have the two-factor authenticator here with insurance. Also, another reason why SMEs should care about insurance is because insurance is a business survival tool, right? I'll show you how insurance can be used as a business survival tool. So now, what is insurance? We just want to make it simple, saying that insurance is a financial safety net for your business, right? Think of insurance as that friend you can lean on. Think of insurance as that friend that has your back, right? Think of insurance as that shoulder you can lean on. Think of insurance as a two-factor authenticator. So I know a lot of us, all of us on this platform, when we buy, let me use the phone as an example. When we buy phones, right? I think there are very few people that will buy phones and not maybe buy pouches and probably screen guard, yeah, to guide it. Why? Because we know that, especially for some of us that use a certain brand, right? You know that if anything happens to that phone, right, the cost of repair is almost the cost of buying another one. So we buy pouches, we try to protect it so that it can absorb the shock when such an event happens. Yeah, that is insurance. So think about your business as that phone, right? And think about your business as that phone. Think about insurance as the screen guard or the pouch that you bought to enable that device absorb the shock in case anything happens. Yeah, insurance is a means of risk transfer, right? Businesses face different type of risk every day as individuals, as businesses, depending on the line and the type of business that we run, right? Yeah. So, but instead of the business to take up this risk, insurance is the risk bearer, right? And insurance can be said to be something that you pay small now, right, to avoid a big loss after. Now, in the course of our business, in the course of our daily transaction and everything, what can go wrong, right? A lot of things can go wrong, right? A lot of things, as little as a spark, right? Electrical spark, right? Can bring a business enterprise to its knees, right? As little as a business, but as little as negligence on the part of someone, probably maybe as little as not even shutting the entrance, right? It can bring a business to its knees. And some of the risks that we face as a business enterprise are what we have displayed here: vehicle accident, fire and theft, just like I mentioned about what happened in the year 2020, business disruption, loss of staff, right, due to death and disability. You know, some staff are very key members of our business, and when we lose them for whatever reason, right, it could be difficult for that business to move on. It could be the business owner, it could be the business manager, or whoever it is, right? But and what this does, when these things go wrong, some of the possible outcome is total financial loss, right? Total financial loss. The business may face legal and regulatory liability. It would cost a lot. It could be a high cost to recover, and it would give a lot of apathy to the investors, right? And this is not good for business, right? The business is set up to outlive generations and to add value to the economy, right? So based on the risks that we've identified, some of the risks we've identified, also we have recommended some covers, right? So here we're saying that for your motor vehicles, right, you can get a motor vehicle insurance, right? What are the benefits of having a motor vehicle insurance? It covers the vehicle against accident and damage, right? So in case there's an accident, in case there's a damage, yeah, the vehicle is covered. So protection against theft. We've seen that happen a lot. In case your motor vehicle is being taken away from you, you're covered. It covers you against third-party liability as well. So in case of an accident where there's a lot of damage or there's a lot of impact on a third party, right, it covers you. And it's also a legal compliance, right? And it is as affordable as low as 25,000 per annum. Yes, 25,000 naira. So you don't have to, it is not a cutthroat price. For as low as 25,000 naira, you can get your motor vehicle cover. Also, we have also recommended Shop Protect, right? It protects your assets, it protects your equipment, it protects the content, yeah, of your business against fire and theft. Also, it covers damage to the building structure, right? So even if the damage goes beyond the content of the business, if it affects the business, yeah, you are adequately covered. And another interesting thing about this product is that it is very, very affordable, as low as 7,350 naira. That is more than what a lot of us spend on data, yeah, on a weekly basis, right? So another product that we've also recommended is the group life insurance. Yeah, people, no matter how beautiful the business proposal is, no matter how beautiful the plans is, no matter how beautiful our processes are, right? We need people to help us drive this initiative, this business, right? But with group life insurance, yeah, it covers the employees in case of death. Now, the group life insurance is mandatory in this part of the world, and for every business that has three or more employees in their business, right? The law mandates that you have a group life insurance to cover them in case of death. What this does is, based on a certain amount, based on a certain premium that we pay, in case the employee passes within the year under cover, the insurance company will pay 300% of what the salary or total emolument of the employee. So this saves the company a lot of stress if this happens, and it also reduces financial liability in case of an employee death, because a company will want to come across as being responsible if at the loss of an employee, will want to go to the family, do one of those things. But with a group life insurance in place, it helps reduce the financial liability of the employer. Also, it offers tax advantages, as mentioned by the previous speaker, right? Because it's a business expense. So it builds some level of trust and loyalty, right, within the employees. And also, like I said earlier, it is mandatory by law. So beyond all this that we recommended for business, right? We have there are other ranges of covers that we can take. Yeah, you're looking at a personal and family, right? We have travels and logistics, retirees and seniors. We have wide ranges of insurance covers for them, for education and for creatives as well. So now, why should we choose insurance as business owners, right? I've said why smart SMEs choose insurance, because it provides essential financial protection, business continuity, and also it secures your assets. It boosts employees' productivity, reduces liability, and it gives an enabling long-term growth mindset, right? Because when all of these things are in place, when you don't have to worry about certain things going wrong in the business because you have insurance in place, it puts you in a better place to think long-term about the well-being and progress of the business. It gives peace of mind. Now, how do I get started? How do we get started? We say the first thing we need to do is to engage a professional, right? People who know this business, who will be able to help us to identify and assess our risk, because as business owners, we are exposed to different risks, right? But with a professional, with seasoned professionals, they will help us to identify our risks, understand our business, and point out the risks that we face on a day-to-day basis. And after that, we need to prioritize the must-have protection, right? You cannot prioritize the must-have protection if you have not done adequate identification and assessment of your risk. So by the time this is done, you'll be able to know that these are critical parts of my business that needs that two-factor authenticator, that needs that protection, right? And everything that you're doing, yeah, has to be well documented and reviewed over time. Yeah. So at the bottom of the page, we're saying that at the end of the day, insurance is not just about spending money, because a lot of us see insurance as an expense. We see it as an expense, right? But it's about protecting everything you've worked hard to build. Everything you've given your sweat, you've given your blood, you've given everything to build. As simple as the plan may be today, right? It can save your business tomorrow. All right. So to contact us, you can contact us via the various channels that we have, via WhatsApp, email, and all the information to contact us are displayed on the screen. All right. Thank you very much, everyone, for your time. Thank you.
Thank you so much. Thank you, Temitope, for the insightful presentation on insurance. And I'm sure that we all we all had key takeouts, insights, and tips that were taken out from this session. I particularly like the analogy between, your phone screen guard and insurance, how insurance protects what you own, your assets, your property, your valuables, so that it's either when it's damaged, you can get it back, and you just show that you can start life from where you were before, not starting from ground zero. So thank you so much. I believe we'll have questions, so I'm just going to start reading the questions that we have. We have some questions in the chat already, so I'm going to start reading it one by one. So for tax questions, it will be directed to Wamaka. Wamaka will help us answer those questions. So Ifi Uche 7373 says, what are tax benefits? So I believe, what are the benefits of tax? So Wamaka, would you like to shed more light on that?
Thank you very much. So what are tax benefits is looking at what are the transactions I can take part in that even though they seem taxable, I will not have to pay additional taxes on them. Okay, so tax benefits are transactions, or they are transactions you can take part in as a business and get tax reliefs for. So for example, in Nigeria, I would say one of the tax benefits we have is government bonds. So if you do government bonds in Nigeria, you won't be taxed on them, even though it is an income. Why I call it an income is that when you take part in government bonds, you have an interest income that you receive from the government. So that type of interest income ordinarily would have been taxable, but in computing your income taxes, that amount is excluded and then it won't be treated as a taxable income. So tax benefits are every single transaction that you can take part in to manage your tax exposure and really reduce your tax liability. So those are all the tax benefits we have.
Thank you, Omaka. So I believe that answers your question for the person who asked that. So another question says, what is the difference between business tax and business insurance? What is the difference between business tax and business insurance?
All right, so before Temitope comes in to also provide a balance on this question, business tax is all the types of taxation that a business is exposed to. So business tax in Nigeria is company, or even other countries, your income taxes, your transaction taxes, taxes on agreements, every single tax that a business is exposed to. So that whole bucket is your business taxation. While business insurance, as he had mentioned, is about safeguard. Temitope can come in to broaden it.
All right, thank you very much. You were doing a very good job. All right, so business insurance is just every protection you need to put in place such that in case there's an unexpected risk in the course of your daily business transaction, you are covered, right? Everything. And it varies from business to business because what we engage in is different, our processes are different. And also that was why I said that for you to know what to do, you need to identify your risk and assess them, right? So once you are able to assess the risks that you face, then whatever you put in place for your business in entirety is the business insurance. Thank you.
Thank you. Thank you for that response, Temitope and Omaka. So I'll go to the next question. What kind of tax can a small business go for?
All right. There's a correction. Is what type of insurance can a small business go for?
Okay. So Temitope, to you, please.
Okay. Thank you very much. So small business is subjective, right? So it still boils down to the fact that we need to understand the business that you run, right? So just like the protection that we recommended, yeah, it's broad, right? So you can take, depending on the type of business that you run, you could put in, you could get the Shop Protect to protect your assets, the content, the valuables, and all of those things. It depends on your operation actually. So the type of business you do, right, determines the type of protection you need to put in place for the business.
Okay, thank you, Temitope. Just to also add to that, so just like Temitope said, for the person who asked this question, so it also depends on if you have a physical store, if you have like a physical asset for your business. So if you have like for instance a shop, you have a store, you know that you can take the Shop Protect, which protects like your physical building and everything that you have in it. But if you have an online store, you necessarily don't have to take the Shop Protect. However, you can also take other plans. You might have a car, maybe a business vehicle that you use for your daily operations, or even a personal vehicle. So you can protect that so that when there's a loss, when there's an accident, when there's a theft, you don't have to start repairing, dipping into your business purse to repair or replace. I mean, we know the cost of cars these days. So there's actually a lot. Of course, if you reach out to us, we'll be able to guide you through on the actual plan that you need for your business based on your request or based on your unique needs. So I'll just go to the next question. Is it necessary to file my taxes if my business is tax exempt?
Yes, so this is a very interesting question. So a lot of people believe that because their businesses are tax exempt, because they are not exposed to taxation in their country, or they're a small enterprise, or they're an NGO, a not-for-profit organization, they are not exposed to file taxes. But please be informed that this analogy is very wrong in a lot of the countries. So why this is wrong is because government is not just about your taxes. Government also wants to know who you are. They want to know what you do. They want to know other activities that you're involved in. So just think of tax filing as a way for government to also mine data for their own internal use. So in our tax laws in Nigeria, and then from my colleagues from my previous company, we have in Nigeria, in Kenya, Uganda, South Africa, where you don't file taxes, even though you're exempt, you face penalties. So in Nigeria, for example, if you don't file your taxes for 12 months, you can be exposed to penalties as low from $500 and above equivalent for not filing your taxes. So you might have seen news, 100,000 naira first month, 50,000 naira for additional months, and then depends on the tax type. There are always penalties for non-filing because government wants your data. They need to know who you do business with. They need to know whether when you even cross the threshold of being a small company and moving to a large company. They can't have that information if you decide that you're filing your taxes in your pockets without giving it to them. And then they also want to know that, are you exposed, or is the business exposed to money laundering? Is the business into crime? Are there other things that they should be aware of? It also helps them to make economic decisions, to let them know which sectors needs more assistance, where should they channel government investment to. So even though you are exempt, the laws require you to file your taxes or you'll be exposed to penalties.
Thank you very much, Mamaka. So the next question, I'll just answer this one because it's pretty straightforward. Can one walk into any UBA branch to get started with an insurance package? The answer is yes. So you can walk into any UBA branch close to you, just speak with the cashier and say you want to buy insurance, and they will put you through. So that's pretty straightforward. Thank you. Next is, please, what can happen to a business that has registered since 2012 and has not filed any annual tax returns?
Okay. So on my slide, there was something I called statute of limitation. So what that means is that for most countries, there is a period that government is exposed to audit you or to review your records to check whether you've been compliant or not. In Nigeria, most West African countries, our statute of limitation is 6 years. So that means for 6 years, government is allowed to go back and audit your records. So now coming back to this, you said a business that has registered since 2012 has never filed any tax returns. So the business should know that they are exposed to penalties, as we mentioned, for not filing. And then if you pick up the business records and they decide and go ahead to compute their taxes, they'll probably get a figure. That figure they get, they're exposed to interest. So if I was in these shoes and speaking to that business, and you've not filed your taxes since 2012, the first thing I'll do is to estimate my exposure. Because if you are going to the tax authorities, you have to go with exactly what you believe you owe. You have to check what are your exposures because they would most likely audit you. The second thing you check is that in your country, is there any voluntary asset declaration scheme that is ongoing? So those schemes allow people to come out and declare to the government that, please, I am owing XYZ amount, see my liability, see my exposure. Can I get a waiver? If I'm able to pay a principal amount of X, can I get a waiver of another amount? So you have to reach out to the tax authorities, come with your exposure, discuss with them, then regularize. Because the disadvantages of non-filing are plenty. And then if you look at it in the long run, compliance is always cheaper than non-compliance.
Thank you, Mamaka. The next question says, can you kindly help us through the process of making insurance claims and what one can do when the response from the insurer is not satisfactory? So I'll take that again. Can you kindly help us through the process of making insurance claims and what one can do when the response from the insurer is not satisfactory?
Okay, thank you very much. So I think the first thing to do is to notify your your insurer of the loss, right? Different insurance providers have different channels, right? For instance, I'll use the S Insurance Group as an example, right? We have multiple channels with which you can reach out to us via email, but via WhatsApp, via our Prince chat box, right? When you notify us, depending on what the claim is, right, you'll be required to provide certain documents, right, to buttress the fact that that claim actually occurred, right? So by the time you provide this document and it is found satisfactory to show that actually this claim occurred, right? There's something called the discharge voucher, right? It will be issued to say that this is the loss that occurred. This is the corresponding sum assured that will be paid. If it is satisfactory, you sign, and within 24 hours, we make payments, right? That is for Health Insurance Group. I know it will differ from what is obtainable with other providers, but I don't believe it will be too far off, right? So when you say when you don't find their services satisfactory, I think it's subjective as well, right? Because it could be that what you find unsatisfactory is the fact that you are not maybe you've not provided a certain document, or you've not provided adequate information to buttress the fact that this actually happened, or it happened at the scale that is being notified, right? But if you are sure that you have met every requirement to ensure that that claim should be paid, then you can reach out to the regulator. You can escalate to the regulator. The regulator is the peak in the industry. By the time you escalate to the regulator, I'm sure it will be resolved. Not that I'm sure, it will definitely be resolved, because the issues will be looked at to know where the loopholes are, and the provider will be summoned and it will be resolved. So basically, but ensure that once there's a claim, notify your insurance provider via the necessary or the available notification channels. Provide all the documents required and everything they ask you to do. Once you provide this, in a matter of days, I'm sure your claim will be paid. Thank you.
Okay, thank you, Temitope. We're wrapping up very quickly because we have a hard stop at 2 o'clock, but we still have a couple of questions, just a few more questions. So this person says, what are the commonly overlooked tax deductions or reliefs that small business owners in Africa can legally take advantage of, and how can we ensure we're not missing them? Omaka, this question is directed at you.
All right. I'll say my response is in 2 buckets. So the first one is tax jurisdiction specific. So when you think of commonly overlooked tax deductions, what this person is saying is, what are some of the benefits that I can get liberty for? What are some common things that we are not looking out for? So, and then my first response is that tax jurisdiction specific means that something can be a benefit in one country, but it's not a benefit in another country. For example, let's look at insurance premium and withholding tax. In Nigeria, if your insurance premium is from a Nigerian registered insurance service provider, there will be no withholding tax on that insurance premium. But if a Nigerian company goes to take insurance premium from a non-Nigerian company or from a foreign company, the government is trying to discourage that in order to support the insurance industry. So a foreign insurance premium is exposed to withholding tax at 10%. So you see, within the same country, the same transaction, we're having 2 different treatments. Another thing that businesses might fail to recognize are things like general provisions. So what are general provisions? General provisions are when you keep a particular amount of money for future use, not as insurance, but you're keeping a particular amount of money. For example, you can say that even though I have a profit of 2 million naira or $5,000, let me say, for example, I've decided to keep aside 1,000 and record it as part of my expense as a general provision that if something happens, I can always go back and dip my hand into that amount. So rather than keep a general provision, it's better to just take an insurance package. An insurance package would be an allowable expense. But when you make it a provision and it's not tied to any expense, you're just keeping it aside. That type of money for tax purposes, we imagine the money, that provision never happens. Even though in your books, you've kept the amount aside as a general provision, the tax law will tell you that that provision never occurred. There is nothing it was earmarked for. And then we'll treat it as part of your income and subject it to tax. So even though the person might come and say that, okay, I had a profit of $5,000, I kept aside the general provision for eventualities of $1,000, subject me to tax on only $4,000. The tax law will tell you that 1,000 never happened and will still subject you to tax. So, and then we've mentioned tax exposure. What are you exposed to? So those are just the items that's here to pay taxes on. So another thing I'll say again is some other opportunities. Insurance, most of the insurance packages, as you've heard, are tax deductible. So that means when you take that type of transaction, the government will treat it as a valid business expense. But there are some transactions that the government believes are not tax deductible. For example, if you have your personal expenses, for example, I own the business and I decide that even though I own the business, I want to pay all my children's school fees using my company's account. For tax authorities, that type of expense is not a business expense. It is an administrative expense for just yourself. It does not concern the business because whether you pay those fees from the company or not, in Nigeria, the Nigerian government will tell you that whether you pay those fees or not, won't your business continue? Is that expense directly tied to your business? Or for example, is rents. You might say now that the rent I'm paying my business rent and I'm paying my personal rent. If the business owner can show that for that rent, there is that same house that they live in, that they are also using for their business, the Nigerian laws allow you to a proration. They will allow you to give a basis that maybe for 5 days a week, it can tell you 50% of the rent cost should be for the business. 50% is your personal use. Are you saying that proration? But if there is no such thing, or if that house is purely for your personal use, even though it is paid from business account, we disallow it, meaning that that expense never happens. So when you take advantage of all those type of benefits, when you keep proper documentation, you're able to check where your money was going to, what are your income, what are your expenses. So that's the second bucket, keep proper documentation. So the first bucket is check your in-country laws, what applies. Reach out to consultants, reach out to the tax authorities when in doubt. The second bucket is your documentation. Document, data is king. In God we trust, all others bring data.
Thank you, Omaka. So we have about 2 more questions, then we'll come to a close. So this one says, how can early stage, this is for insurance, by the way, how can early stage or low income entrepreneurs decide which type of insurance are essential, especially when operating on a tight budget?
Okay,
Mr.
thank
can you
you.
just give a couple of insurance
Yeah.
products? Yeah, for a second.
Okay, so so I think we've addressed this in different ways, right? So you need to understand, you need to identify and assess your risk first. So depending on how tight your budget is, right, there are some things, there's some protection you need to put in place, no matter how tight it is. For instance, if you operate a physical if you operate within the brick and mortar, right, it is essential that you have the shop protect in place because of theft, burglary, and all of that. It is essential. So no matter how tight your budget is, you need to do that. If you operate, if you're into logistics, for instance, right, and you have motor vehicles, Okada, and everything that you use for business, yeah, it is ideal for you to have that, for you to have a motor vehicle insurance in place, and like that. But I think the first point, the first point of call is not what can I take, but understand what risks that you face. Then it will help you to determine what you can put in place. Thank you.
Thank you. Last question is on tax. There's been much there's been different information flying around about tax registration. Does having a TIN automatically make you a taxpayer even without registering with the relevant tax authorities?
All right, thank you. So the first response to this is, please remember tax is jurisdiction specific. Tax relates to the locality you are in. Whether personal income tax, state taxes, federal, business taxes, all relate to where you are in. So having a tax identification number, does it make you a taxpayer automatically? What you have to check is that for TIN, that's tax identification number. What are the rules of TIN in my country? In Nigeria, for example, we've done a system such that once you have a national identity number, once you have an NIN, you automatically have a tax identification number and you are registered for taxes once you have an NIN. So does it make you a taxpayer? What makes someone a taxpayer is whether the person earns taxable income in that country. So you have to check that in the country where I'm located, do I earn taxable income? Is that income exposed to taxes? Once the answer is yes, you're a taxpayer. If you earn taxable income and you've not been paid, you're a defaulter. You're already at fault with the government. So you have to check what are the rules in that country. And also within that country, am I supposed to pay these taxes to federal government or to the state government, or is it to any particular authority? Because even within the country itself, there are also rules that apply to individuals. There are rules that apply to business types. There are rules that apply to the business sector. So you can use, sometimes for your high-level research, you can use your AI tools at your disposal, but please, I have to add a caveat. Whenever I use AI tools and it concerns law, tax laws, or any type of laws, actually get someone to open the laws and check whether it's correct. Because some of these tools, they are not structured or tailored to the African practice. They're not tailored to how things operate in Nigeria. They might give you examples or scenarios that are not unique to Africa or to Nigeria or to the particular country. So no matter how much you support AI tools, that will just give you the high-level overview. Go back and open the tax laws and check whether what it has said, whether it's in alignment. So that's my response on this. Thanks.
Thank you, Omaka. So the final question is on insurance. So it says, does Health Insurance have a maritime package for Nigerian exporters?
I didn't get that.
Okay, so I'll read the question again. It says, does Health Insurance have a maritime package for Nigerian exporters? I believe this is speaking to marine insurance, basically. Yes.
Yeah, so we do. You can contact us for more information on that.
Okay, absolutely. Thank you, Temitope. So I'll hand over to Aisha now to wrap up.
All right. Thank you very much, Wamaka. Thank you very much, Temitope. Thank you, Chineye, for the wonderful session. Thank you, everybody, for joining us. You asked very interesting questions. Even I have learned a thing or two from these sessions, and I hope that we've all picked something from the sessions as well. Thank you again for sharing your knowledge and experience with us, Wamaka and Temitope. We would be glad to have you come again, maybe sometime soon. Because I mean, obviously, we had a lot of questions, so I'm sure people will still have questions that they want to ask us. Yeah, so this would be the end of today's session. Would reach out to you, join us again, and I hope that we've all filled the form. This is the only way that we can reach out to you for more information that we might have to share with you. All right, I'll give maybe 1 minute for other people to, if you haven't seen the form, give you 1 minute to fill up the form, and so we can have your details and we can reach out to you after the session. All right, thank you, everybody. I hope you have a wonderful, wonderful day after this. Do enjoy the rest of your day.
Thank you. Bye.
Thank you.
All right.